biggest mistake, the most important mistake I think 90% of people in crypto are making is that they don't realize that ETFs are multi-year stories. So usually in an ETF, it really struggles to get any assets in its first 6 months or its first year or its first 2 years. And it hits its stride in years 3, 4, 5, 6, 7, and 8. If you look at the gold ETF when it launched, everyone was excited. The best performing ETF of all time. Year 1 was the smallest year I think maybe it ever had until it had a negative year. It had 8 years of ascending flows. The reason I bring that up is I have a high degree of confidence that flows in 2025 will be bigger than flows in 2024. And then I have a high degree of confidence that flows in 2026 will be bigger than 2025.
The launch of Bitcoin ETF in 2024 shattered previous ETF launch records, marking it as the most successful ETF rollout of all time. Hougan highlights that Bitcoin ETF accumulated $20 billion in assets within their first year, far surpassing the $5 billion raised by the Nasdaq QQQ ETF during the tech bubble of 1999. He predicts that by the end of 2024, Bitcoin ETF could reach $25 billion or more, demonstrating unprecedented investor enthusiasm for exposure to digital assets. Hougan emphasizes that this launch exceeded even his bullish expectations, despite having dedicated 5 years to promoting such ETF at the SEC. Major financial institutions like BlackRock, Bitwise, and Fidelity are now actively involved, providing further legitimacy to the crypto space. He believes that 2025 will be an even bigger year for Bitcoin ETF as more banks, including Morgan Stanley and Wells Fargo, begin integrating these products into their offerings. According to Hougan, this is just the beginning. Crypto ETF are on a multi-year growth trajectory.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Before I joined Bitwise 6.5 years ago, I was the CEO of ETF.com. So this is a space I know well. The most successful ETF launch prior to these was the Qs, the NASDAQ 100 Qs, which launched in the 1999 tech bubble, right? Perfect timing, and gathered $5 billion in assets. And the Bitcoin ETFs are up to 20. The year's not over. I think that number could go up significantly after we get past the election. So maybe we end at $25+ billion. So that's not just beating it, that's like shattering the record, right? It's not even close. Investors were very eager to gain exposure to this asset class. The ETFs came off with an incredible offering from a price perspective, and that's just a perfect combination. And to see 20, it's going to be 25, it could be more than that, $1 billion in their first year. Yeah, it's just a grand slam. I would say better than I expected. I was really bullish on a Bitcoin ETF and an Ethereum ETF. You know, we worked on it for 5 years at the SEC. I beat my head against the wall, made my hair turn gray. So I was all in, but it exceeded my expectations. I don't think anyone looking, particularly at the Bitcoin ETF, we can even talk about the Ethereum ETF, but anyone looking at the Bitcoin ETF has to admit it's the most successful ETF launch of all time. I've been really pleased to see multiple players win. That's actually good for the space. It's good that BlackRock is out there talking about it, and Bitwise is talking about it, and Fidelity is talking about it. That's been really nice. And I think we're just getting started. I think next year is going to be a bigger year than this year. So from a 30,000 foot perspective, it exceeded my expectations on Bitcoin. I think Ethereum is a mixed story, but there are reasons to be bullish there. But I'm really, really pleased. The obsession with daily flows is completely wrong, because the way authorized participants work, the flows that you see reported in an ETF today may have come in yesterday, may have come in the day before, may be coming in 2 days from now, right? There's not a one-for-one exact alignment of when an end investor wants exposure to X and when you see a flow posted on the board. And because people don't understand the plumbing of that, they overly focus on daily flows. My advice would be look at weekly flows. look at monthly flows. Monthly flows really smooth that out. You get a feel for where people are going. Daily flows, like, I don't know, we had $100 million in our ETF the other day, and then we had zero. It wasn't that there was zero demand. It's that APs are averaging it out. So that's one mistake. The other, the biggest mistake, the most important mistake, I think 90% of people in crypto are making, is that they don't realize that ETFs are multi-year stories. So usually in an ETF, it really struggles to get any assets in its first 6 months or its first year or its first 2 years. And it hits its stride in years 3, 4, 5, 6, 7, and 8. If you look at the gold ETF when it launched, everyone was excited. The best performing ETF of all time. Year 1 was the smallest year I think maybe it ever had until it had a negative year. It had 8 years of ascending flows. The reason I bring that up is I have high degree of confidence that flows in 2025 will be bigger than flows in 2024. And then I have a high degree of confidence that flows in 2026 will be bigger than 2025. The reason for that is it's still getting turned on at Morgan Stanley. It's still getting turned on at Wells Fargo. People are still studying it. It's moving into the mainstream. So the biggest mistake I think people make is like imagining that we're on this one-off rocket ship that then lands. It's actually, no, this is a staircase, right? That's the way every ETF almost ever has worked. Maybe this time it's different. Who knows? But my bet is that we're on that staircase and we're going to look back in a few years at like, oh, wasn't 2024 cute? $20 billion. Like, great.
Bitcoin's value proposition as digital gold resonates strongly with investors concerned about fiat currency debasement, inflation, and monetary policy risks. Hougan believes Bitcoin has an easy narrative and valuation metric. Investors can compare it to gold and other stores of value to estimate its potential market size. This simplicity makes Bitcoin more appealing to institutional investors looking for an inflation hedge or a store of value. Bitcoin ETF also facilitate participation by institutions that require regulated financial instruments. Hougan points out that many investors are reluctant to engage with crypto unless they can do so through a regulated derivatives market, which is still developing. Drawing parallels to the evolution of gold's financialization, he notes that while there may be concerns about paper Bitcoin, the benefits of a regulated ecosystem will outweigh philosophical objections. By broadening the range of investors, ETF normalize Bitcoin within traditional finance, enabling it to fit into the strategies of the world's largest banks.
When we talk about Bitcoin, we talk about it as sort of filling the same role as gold, but in a digital format. And that's a beautiful, simple narrative. I think it's accurate. I think a lot of people are concerned about fiat debasement. I think a lot of people are concerned about hedging against inflation. I think a lot of people think monetary authorities are out of control. And so Bitcoin sells easily into that. Also has an easy valuation metric, right? You can look at the market for gold, you can look at the market for other stores of value, and you can arrive at a valuation target for Bitcoin. So that's easy. When we talk about Ethereum, what you're talking about is a public computer. We talk about it as a new platform on which you can build applications that can change the world, right? So just like iOS is a centralized platform on which applications like Uber are built, Ethereum is a decentralized platform on which applications are built. The beauty for institutional investors, if you look at the killer apps in crypto outside of money, they're all built on primarily Ethereum. Stablecoins are an absolute killer app that institutional investors can understand. The majority of stablecoins are issued on Ethereum. Tokenization is a killer app that institutional investors are more excited about than the reality in the market, but it's still a big idea. And all of that, or most of that, is being built on Ethereum. Even when you get to sort of individual applications, a lot of them resolve to Ethereum as well, right? Polymarket built on Polygon, but resolves ultimately into the Ethereum ecosystem. So when you talk about this new application, sort of new application layer on which killer apps are built, I think that appeals to institutional investors, but it's a more complex story, right? And it's a more complex valuation case, and it's newer. So I think it will inherently take more time. So the first is, I think there were a lot of non-long biased investors in ETH, the grayscale product, right? Because once the Bitcoin product converted, everyone knew we would eventually get an Ethereum ETF. Now, we got it faster than we thought, but everyone knew that would happen. And so I think a lot of the assets that were in ETH at that point were people arbitraging the discount in that market, and those just rotated out when we switched over to an ETF. If you look at the individual ETFs, they're doing quite well, right? iShares is above $1 billion. At Bitwise, we're around $300 million. $300 million in 3 months in an ETF is like one of the 50 fastest growing ETFs of all time, right? So doing just fine from that perspective. But I think a lot of money rotated out of ETH and the arbitrage play. The other factor is that it was just too soon. I mean, I said this before the ETF launched. It would have been better to launch those products in January or February of 2025. People are still getting their hands around Bitcoin and their hands around crypto and accepting crypto as an asset class. Once you have to have a complicated conversation about how Bitcoin is different from Ethereum with a financial advisor, that's like a many month conversation. It would have been better to have more time for Bitcoin to season before we got ETH. But, look, I think we'll look back in a couple of years and there'll be $10-20 billion in Ethereum ETFs and everyone will be happy. It's just right now out of the gate, there have been net outflows. Particularly Bitcoin is ultimately a financial asset. Yeah. And so if you want it to function as a financial asset, you need all the things that finance people do. Another way to think of it is there's a group of investors who won't participate in this ecosystem without a robust regulated derivatives market, which right now we don't really have. And so you're bringing more people into the ecosystem. The sort of, you've seen it with gold for years. These people worried about paper gold and the financialization of gold. And you can sort of walk yourself into tortured philosophical argument why that's wrong. And I think that's sort of way too mid-curve. I think the reality is just think of it as a financial instrument. You want finance people to have all the tools at their disposal. Right now, they don't have all of them. They have some of them. Maybe another way to frame this is these exact same arguments were made a year ago about the ETF. We don't need the ETF, right? People can already access it. It's paper Bitcoin, etc. What's happened? It's dramatically broadened the group of investors who participate in the Bitcoin ecosystem, and the price is up substantially. I think the same thing is true here on derivatives. Just think of it as broadening the network of people that can participate in Bitcoin and making Bitcoin look like more of their assets so it can be used at the largest banks in the world in their strategies. That's going to be the primary impact. There's probably some derivative overlay issue with paperized Bitcoin, but I think it's overwhelmed by this normalization factor.
Matt Hougan's insights provide a compelling vision for the future of crypto ETF. The launch of Bitcoin ETF has already shattered records, and the continued involvement of major financial institutions suggests that the mainstreaming of crypto is well underway. While Ethereum's story may take longer to unfold, its potential to power decentralized applications positions it as a key player in the future of finance. Hougan's message is clear. The success of Bitcoin and Ethereum ETF will not be a one-time event, but a multi-year journey. As more investors gain exposure to these assets and financial infrastructure develops, crypto ETF will become integral to the global financial landscape. Investors should take the long view. Crypto ETF are not just a passing trend, but part of a larger transformation in how people invest and protect wealth in the digital age.
Please like and subscribe my channel.